There was once a trader who felt trapped by his small account. Every candle felt heavier, every loss felt louder, and every tiny gain felt too slow to matter. He wasn't lazy. He wasn't unmotivated. He simply believed a small account was too weak to create real progress. And because of that belief, he traded like someone who was always trying to catch up. Every morning, he opened the charts with hope. And every afternoon, he closed them with frustration. He tried everything: new strategies, new indicators, new mentors. But no matter what he changed, the result remained the same: inconsistency. One week he won big, the next he gave it all back. Deep down, he asked himself the question countless traders ask silently. Is my account too small, or am I just not built for this? One night, after a painful loss, he stared at his empty chart and realized something powerful. The problem wasn't the market, and it wasn't the size of his account, it was the way he thought. He rushed trades because he wanted fast results. He overleveraged because he was impatient. He repeated the same mistakes because he wanted progress without mastering the basics. It wasn't his account that needed to grow, it was his mindset. That was the moment everything shifted. He stopped trying to flip his account. He stopped chasing perfect trades. He stopped measuring his worth by his balance. Instead, he focused on patience, discipline, execution, and emotional control. And slowly, the market began rewarding him, not with huge profits at first, but with something even more valuable: consistency. And here's the truth most traders never understand in time. A small account is not a limitation. It's training. It forces discipline. It forces patience. It forces you to build the habits that protect your future profits. Every great trader you look up to started with a small account. What made them successful wasn't luck, it was the mindset they built while growing it. In this video, I'm going to share the 7 mindsets that transform small account traders into consistent, confident, long-term winners. These aren't theories. They're the same mindsets that separate emotional traders from disciplined ones, and gamblers from professionals. If you've ever felt stuck, slow, or underestimated, then stay until the end. Because once these mindsets click, you won't just grow your account. You'll grow into the trader you were meant to become. 1. Mindset of patience. Slow is fast in trading. Before that trader ever saw real progress, he had to confront the hardest truth in the entire trading journey. He wasn't patient, he was in a rush to win. And nothing destroys a small account faster than impatience disguised as motivation. Every morning, he used to open his charts like a man entering a battlefield. Anxious to find a setup, eager to be in a trade, desperate to see green. The market would move, and even if it wasn't his setup, even if nothing aligned with his rules, he'd jump in anyway and say, maybe this one works. But hope is not a strategy, and impatience is the most expensive teacher in the world. The turning point came when he realized something painfully simple. The market doesn't care about your excitement. It rewards discipline, not speed. And for the first time, he forced himself to wait. Not 5 minutes. Not one candle. Sometimes an hour. Sometimes the whole day. Sometimes, nothing. At first, it felt like torture. Sitting there, watching price move without him. Fighting the urge to just take one quick trade. But as time passed, something shifted. He noticed that the less he traded, the better he traded. His losses became controlled. His accuracy improved. His decision-making sharpened. Because patience creates clarity, and clarity creates high-quality trades. He learned that a small account grows through precision, not activity. One good trade can be worth more than 10 rushed ones. One high-quality entry can make up for a week of waiting. And one moment of patience can protect you from a month of regret. Soon, he started treating patience like a superpower. He didn't chase the market, he let the market come to him. He didn't fear missing trades, he feared taking the wrong ones. And he began to understand the mindset every successful trader eventually learns. If you cannot wait, you cannot win. A patient trader is a dangerous trader, calm, calculated, and confident. They don't react to the market, they respond to their plan. They don't rush opportunity, they allow opportunity to form. And they know that growing a small account is not about catching every move. It's about catching the right move at the right time. So before you learn strategy, before you master analysis, before you dream of scaling your capital, build this mindset first. The mindset that whispers, I don't need to be in the market all the time. I only need to be right at the right time. Because once patience becomes your default, your results begin to rise, slowly at first, then suddenly. 2. Mindset of risk control. Protect the account, protect the future. Before the trader ever learned to grow his account, he had to learn how to protect it. Because a small account doesn't die from one mistake. It dies from the belief that one trade won't hurt. And that belief almost ended his journey before it even had a chance to begin. Back then, he traded like someone who thought money was unlimited. He increased his lot sizes when he felt confident, doubled them when he felt desperate, and ignored his stop loss whenever fear or hope took over. His losses weren't caused by the market. They were caused by his lack of risk control. One day, after a string of emotional decisions, he blew his entire account in just 2 trades. He stared at the screen, shocked, embarrassed, and angry, not at the market, but at himself. And in that moment of silence, he realized something powerful. I didn't lose because my strategy was wrong. I lost because my risk was wrong. That realization became the foundation of his new mindset. Instead of focusing on how much he could make, he focused on how much he was willing to lose. Instead of dreaming about big wins, he learned to respect small losses. Instead of treating risk management as a limitation, he treated it as insurance. His protection against his own emotions. He set strict rules. Never risk more than a small, fixed percentage. Never move the stop loss out of fear. Never enter a trade he couldn't emotionally handle losing. Never let confidence trick him into increasing risk randomly. At first, it felt uncomfortable. Limiting risk felt like limiting potential. But slowly, he realized the truth hidden behind all consistently profitable traders. Growth begins the moment you protect your capital, not the moment you chase profits. Something magical happened once he respected risk. His emotional stress disappeared. His fear of losing faded. His need to win back losses vanished. Because now, every trade had structure, purpose, and boundaries. He wasn't gambling anymore, he was managing a plan. And that's when his account stopped bleeding. His performance stabilized. His mindset sharpened. Risk control didn't make him cautious. It made him confident. He no longer feared losses because they were planned, measured, and manageable. And that confidence allowed him to execute better, think clearer, and trade without panic. Most small account traders destroy themselves not because they lack skill, but because they lack protection. They treat every trade like a lottery ticket. But professionals treat every trade like a business decision. So the second mindset is simple but powerful. Protect your account as if it's the last one you'll ever have. Because once you master risk, the market stops being your enemy and starts becoming your opportunity. 3. Mindset of discipline. Trade your plan, not your feelings. Before the trader ever became consistent, he had to win a battle far more difficult than any chart pattern or market condition. The battle against himself. Because a small account doesn't fail from bad analysis, it fails from a lack of discipline. In his early days, he had a plan written down clearly. His entry rules, exit rules, risk percentage, and trading hours. But the moment the market opened, all those rules disappeared. If price moved fast, he jumped in early. If a candle looked strong, he ignored confirmations. If he felt bored, he traded anyway. He wasn't following a strategy, he was following his emotions. One day, after breaking his rules again and losing more than he could accept, he closed his laptop and felt something heavy inside him. It wasn't anger, it was realization. My plan didn't fail. I failed my plan. That truth hit him harder than any loss he ever took. Because deep down, he knew the market wasn't the enemy, his lack of discipline was. So he made a decision. A serious one. If he wanted to grow his small account into something meaningful, he had to become the type of trader who could consistently do what needs to be done, whether he felt like it or not. He rebuilt his routine from the ground up. He only traded during his chosen time window. He refused to enter unless every rule aligned. He stopped touching trades that were already planned. He accepted his stop loss without editing it. He walked away after hitting daily limits, win or lose. The first week was tough. Discipline felt rigid, uncomfortable, almost too strict. But something unexpected happened. His trading became easier. Not because the market changed, but because he changed. Decisions became simple. If it fits the plan, take it. If it doesn't, skip it. No negotiation. No justification. No emotional arguments. Slowly, discipline turned into his identity. He wasn't the trader who forced trades anymore, he was the trader who waited for them. He wasn't the trader who chased price, he was the trader who let price come to him. He wasn't the trader who traded based on feelings, he traded based on structure. And the results followed. His win rate improved. His losses shrank. His stress dropped. His confidence grew. Because discipline is the bridge between knowing what to do and actually doing it. Most traders know exactly what they should be doing, they just can't make themselves do it. And that is where consistency dies. But the ones who rise above the rest are the traders who learn to obey their rules even when emotions scream the opposite. So the third mindset is this. Your discipline determines your destiny. A small account in the hands of a disciplined trader can grow into something powerful. But in the hands of an emotional trader, it doesn't stand a chance. 4. Mindset of emotional control. Master your mind, master the market. Before the trader ever became confident, he had to conquer the most dangerous force in trading, his own emotions. Not the market, not the volatility, not the news, but the fear, greed, and frustration inside him. Because a small account doesn't get destroyed by charts, it gets destroyed by emotional decisions. In the beginning, his emotions controlled everything. When price moved against him, fear whispered, "Close now before it gets worse." When price moved in his favor, greed shouted, "Hold longer, don't you want more?" When he took a loss, anger screamed, "Get it back now." His account didn't collapse because he lacked skills. It collapsed because he couldn't control the storm inside his own mind. The breaking point came after a revenge trade that wiped out nearly half of his balance. He stared at the screen, breathing fast, hands shaking. Not because of the loss, but because he knew he wasn't trading anymore. He was reacting. He closed his laptop and walked away. That night, he admitted something that most traders never have the courage to admit. It's not the market hurting me, it's me hurting myself. From that moment, he made emotional control his priority. He realized that a small account requires twice the discipline and half the emotion. So he built habits that brought calmness and clarity to his trading. He started journaling his emotions after every trade. He set a daily loss limit to prevent emotional spirals. He took breaks after losses instead of trying to win back immediately. He practiced deep breathing before entering high-quality setups. He walked away from the screen when he felt excitement or anger rising. Slowly, something changed. The fear that once paralyzed him became manageable. The greed that once controlled him became silent. The frustration that once pushed him into reckless trades began to fade. He no longer entered trades to prove something. He no longer chased profits out of desperation. He no longer panicked when a trade went against him, because he had a plan. The calmer he became, the better he traded. His entries improved. His exits became precise. His losses became controlled. His account started stabilizing. Because emotional control doesn't just improve your trading. It transforms your relationship with the market. You stop acting like a gambler chasing highs. You start acting like a professional making decisions with clarity and logic. Most traders fail not because they lack talent, but because they never learn to calm the emotional waves inside them. But the ones who succeed, they treat control as their true edge. So the fourth mindset is this. If you don't control your emotions will control your account. But once you master your mind, the market stops feeling like chaos and starts becoming a place where you finally operate with power, peace, and precision. 5. Mindset of consistency. Repeat the right actions, not the emotional ones. Before the trader ever saw real, steady growth, he had to embrace one of the most underrated yet powerful truths in trading. Consistency beats intensity. Not big trades, not big risks, not big wins. But the repeated act of doing the right thing, over and over, even when it feels boring. When he first started, he traded like someone chasing excitement. Some days he took 10 trades. Other days he took none. Some weeks he followed his rules closely. The next week, he threw everything out the window. His results were unpredictable because his behavior was unpredictable. And a small account cannot survive inconsistency. The moment everything changed was when he realized this. If my habits are inconsistent, my results will always be inconsistent. So he looked at professional traders, not their profits, but their patterns. They all had one thing in common: a structured routine. They didn't rely on motivation. They relied on systems. He decided to build his own. Every day, he followed the same steps. A pre-market routine to prepare his mind. A checklist before entering any trade. A trading window to keep him focused. A rule to stop after hitting daily limits. A journal to track both performance and emotions. At first, it felt repetitive. Almost too simple. But slowly, consistency became his greatest strength. His mind became calmer. His decisions became sharper. His trading became smoother. He stopped chasing signals because his routine gave him structure. He stopped forcing trades because his plan guided him. He stopped repeating mistakes because his journal revealed them. Consistent actions created consistent results. What surprised him most was this. Consistency didn't just improve his performance. It improved his identity. He no longer saw himself as a trader trying to be consistent. He became a trader who was consistent. And once that identity locked in, everything changed. His account began growing steadily instead of unpredictably. His losses became easier to manage. His wins became more meaningful. His confidence became unshakable. Because consistency builds trust, not trust in the market, but trust in yourself. And trust is the foundation of every successful trader's journey. Most traders never reach consistency because they chase intensity. They want quick results, dramatic progress, and fast profits. But the traders who survive long-term understand a simple truth. Small, repeated, correct actions create massive long-term results. So the fifth mindset is this. Consistency is a skill, and once you master it, even a small account becomes unstoppable. Because the market rewards discipline, not chaos. And consistency is the key that unlocks everything. 6. Mindset of long-term vision. Trade for the future, not for today. Before the trader ever experienced real growth, he had to break free from the single mindset that holds most small account traders hostage. The obsession with quick results. He wanted profit today, he wanted progress today, he wanted success today. And that short-term hunger blinded him from the bigger picture. When he first started trading, he checked his balance every hour. He judged his skill based on yesterday's results. One loss made him doubt everything. One win made him feel unstoppable. His emotions rose and fell with every trade because he wasn't thinking like a professional. He was thinking like someone who wanted success instantly. Then one day, he heard a quote that hit him harder than any loss. A year from now, you'll wish you started with patience today. That night, he realized something powerful. He wasn't building a trading career, he was chasing dopamine. He wasn't developing skill, he was chasing shortcuts. He wasn't growing, he was rushing. So he made a decision that shifted his entire journey. He stopped trading for the next hour and started trading for the next year. He created a vision far bigger than a single trade. He imagined managing a larger account one day. He imagined trading without fear. He imagined earning consistently instead of emotionally. He imagined being the trader he always wanted to be, calm, skilled, patient, confident. And that long-term vision changed the way he approached every decision. Suddenly, small losses didn't bother him, they were simply part of the journey. Suddenly, slow growth didn't frustrate him, it meant he was doing it right. Suddenly, missed trades didn't hurt, there would always be another opportunity. He stopped comparing himself to traders who had bigger accounts, more experience, or a different path. He understood that the market is a marathon, not a sprint. And survival always matters more than speed. With long-term vision, he became more selective with his trades. His risk became smarter. His decisions became calmer. His goals became clearer. He no longer said, "How much can I make today?" Instead, he asked, "How can I become a better trader this month? This year? Long term?" That shift in mindset transformed his small account into something powerful, a foundation. A place to grow skill, discipline, and confidence. The things that actually lead to real financial freedom. Most small account traders blow their capital not because they lack strategy, but because they lack perspective. They trade like today is the only day that matters. But the ones who succeed understand something deeper. The goal isn't to win fast, it's to stay long enough to win consistently. So the sixth mindset is this. Trade with the future in mind, and the present will finally start working in your favor. 7. Mindset of self-belief. Your confidence builds your results. Before the trader ever reached consistency, growth, and emotional stability, he had to overcome the final, and often hardest, mindset of all. Believing in himself. Because a small account doesn't limit you nearly as much as a weak self-image does. And for the longest time, he didn't truly believe he could become a successful trader. He doubted his skill. He doubted his decisions. He doubted his ability to change. He doubted whether he had what it takes. Every loss felt like proof that he wasn't good enough. Every mistake felt like confirmation of failure. Every blown account echoed the same painful thought. Maybe I'm just not meant for this. But here's what he eventually learned. Every trader you see winning today once felt exactly the same way. Every profitable trader once questioned their own ability. Self-belief isn't something you're born with, it's something you build. His turning point came during one of the lowest periods of his journey. He had followed his plan, respected his risk, stayed disciplined, and still took a loss. He felt the old doubt creeping back in, whispering that he wasn't improving at all. But instead of breaking down, he asked himself, "If I don't believe in myself, who will?" That simple question changed everything. He realized he didn't need massive success to believe in himself, he only needed progress. Small signs of growth. Small improvements. Small victories. And he started acknowledging them. One disciplined trade, progress. One patient decision, progress. One controlled loss, progress. One avoided revenge trade, progress. He celebrated growth instead of perfection. He valued effort instead of outcomes. And with each small victory, his belief grew stronger, not loud or arrogant, but quiet, stable, and powerful. Self-belief became his shield against doubt. It kept him steady during drawdowns. It kept him focused during slow periods. It kept him motivated when others quit. Because belief creates action, and action creates results. As he built confidence in himself, he noticed something profound. His trading improved. His emotional control strengthened. His discipline became natural. His account began to grow steadily, not because the market changed, but because he changed. Most traders quit too early not because they lack talent, but because they lose belief in themselves long before the market rewards them. But the ones who succeed understand this final mindset. You don't trade the charts first, you trade your identity first. Become the trader who believes he can win, and your results will start proving you right. So the seventh mindset is simple but life-changing. Believe in your growth, even when it's slow. Believe in your discipline, even when it's tested. Believe in yourself, even when the results haven't shown yet. Because self-belief is the fuel that carries you through the hardest parts of the journey. All the way to the finish line. If you've made it all the way to this point, then you've already proven something most traders never realize. You're serious about your growth. You're not here for shortcuts, hype, or quick profits. You're here because you want to become the trader who wins through discipline, patience, emotional control, and belief in yourself. And that alone puts you ahead of millions. Think about everything you've learned in these 7 mindsets. You've discovered the power of patience. You've learned why risk control protects your future. You've seen how discipline shapes your results. You've understood the importance of emotional control. You've embraced consistency, long-term vision, and the strength of self-belief. These aren't just trading lessons, they're transformations. Because every step you take from here is another step toward becoming the trader you were meant to be. Not emotional. Not chaotic. Not desperate. But calm, confident, strategic, and consistent. Remember this truth. Your small account is not your limitation. It's your foundation. It's the place where you sharpen your skills, control your emotions, master your habits, and build the identity of a real trader. And once your mindset is strong, the profits will follow. The growth will follow. The success will follow. You don't need luck. You don't need a massive account. You don't need to rush. You only need to keep improving, one decision at a time. So here's your next step. Take these mindsets with you. Apply them. Review them. Live them. Because consistency isn't built in a day, but it is built every day. And if this video helped you grow even a little bit, if it motivated you, taught you something new, or gave you the clarity you've been needing, then do me one favor. Hit like so more traders can find this and transform their mindset too. Subscribe because I'm dropping more powerful lessons to guide your journey. And share this video with anyone who needs that push, that motivation, or that moment of clarity to keep going. Your journey is just beginning, and you're already on the right path. Keep learning, keep growing, and never forget. The trader you want to become is already inside you. Now it's time to prove it.